Let's compare entering 1099 DIV into FreeTaxUSA tax software and TurboTax. Select 1099 DIV in either software and click Add Dividend Income or Add Investments. In FreeTaxUSA, you are taken directly to 1099 DIV form, but in TurboTax, you are asked to search for a financial institution. Once I add Fidelity, I can import it from my broker, which is very helpful for the more complex forms or for people that may not feel comfortable entering the information themselves. Even though I initially selected 1099 DIV in TurboTax, now I have to specify it again. Now I'm giving an option to again import it from my broker, upload it from my computer as a PDF or an image, or use my phone to snap a picture of it and use a QR code to load it up. I will select type it myself. Again, if you have a very complex statement, importing and then reviewing would be recommended. Then add the information from your 1099 DIV section on the broker statement, which most of the time is listed first. Match the line number information to the box in the software. Add the ordinary and qualified dividends and any capital gains you have received. What is the difference between ordinary dividends and qualified dividends? Ordinary dividends encompass both qualified and non-qualified dividends. So in our case, Jane had $434.97 in qualified dividends and $320.88 in non-qualified dividends, which I can calculate by subtracting the qualified dividends from the total ordinary dividends of $755.85. The reason for separating qualified dividends is because they are taxed at a preferred long-term capital gains tax rate, while non-qualified dividends are taxed at regular ordinary income tax rates. Often taxpayers say they didn't receive any dividends because they opted to reinvest them back into the equities. However, the IRS considers any dividends received as taxable income whether they are reinvested or not. What about the capital gains reported for the mutual funds you own? Even if you don't personally sell any of your mutual funds, the funds generate capital gains for you when they buy and sell their assets at a gain. One good thing though is that the capital gains on mutual funds are considered long-term capital gains distributions, regardless of how long you own the shares in the mutual funds. Notice how with TurboTax, I only have 3 boxes listed, while in FreeTaxUSA, I have many more. The first time I did that, I missed the My Form has info in other boxes checkbox and then had to go back. Make sure if you have information in the other boxes that you also add it in the software, especially if you have something listed in box 12, which is exempt interest dividends. What is that? Both software are pretty good on providing additional information if you need some clarification. Dividends from U.S. bonds are subject to federal tax, but some states don't tax them. So by entering this additional information, the software will make sure it is transferred to your state tax return, where it could be subtracted from your income. Check the supplemental pages of your broker statement for box 12 additional information and verify whether your state doesn't tax them. One nice little summary that TurboTax provides is the info on whether the capital gains you listed would be taxed or not. The rates on long-term capital gains are taxed differently than your ordinary income or short-term capital gains. Long-term capital gains have more advantageous rates and can be taxed at 0%, meaning they won't be taxed at all if your income is at certain threshold. As in our case, since Jane made less than $44,625 in 2023, her long-term capital gains won't be taxed at all. So the $1,052 is tax-free for her. The qualified and ordinary dividends from the 1099 DIV will appear on tax form 1040 lines 3A and 3B. Additionally, they will be reported on Schedule B in Part 2 for ordinary dividends, and on Schedule D Part 2 line 13 if you had any capital gain distributions. Thanks so much for watching.